Today's topic is about where to find certainties. There are only three places. 5% of what you hear or read is okay, is good. But remember, beware, 95% of what you hear or read is dated or irrelevant. If the situation is uncertain, the stocks will continue to fall. When you look at the daily trading of each stock, you will find that every day the stock goes up and down many times, regardless of whether the trend is uptrend or downtrend. When we are faced with these three certainties, we have only two choices. Either we wait for the long term, or we play the short term. Let me give you an example of what we used to do when we buy and wait for the long term. You buy 1,000 shares at $10 each, and you're hoping and dreaming that the price will go up to $30 next year. You're willing to wait for 1 year, and then you sell it, and you make about $20,000 profit after 1 year. The problem is, who can predict this? Nobody. Another example is you try to play the short term. So try to set a target that you want to earn about $100 daily average profit. You are only satisfied with $100 each day. So in a week, because the stock market opens 5 days, you earn about 500 average. And suppose that the market only opens 50 weeks in a year, although there are 52, you just suppose that it opens for 50 weeks, then you will earn about $25,000. And you compare this short term with the long term. The short term beats the long term in about 1 year, and you get cash profits day after day. So my conclusion is that I recommend you to act short term in order to build a long term. So this is not something that is new, it's something that everybody is doing every day in your job or in your business. You go to work every day, but you're always thinking about building a better future. Now, when we talk about the daily fluctuations where you can play, let me give you some examples. So I just pick a date, which is Thursday, October 23rd this year, only a few days ago. Three companies that I picked: Alcoa, Intel, and Bank of America. Alcoa, AA is the symbol. The daily range is 952 to 1085, and the closing price is $9.99. And on that day, the stock was down by 53 cents. But you see the range, more than $1 range within the day. It is on a downtrend. Intel, another stock, the range $13.90 to $14.95, over $1. The stock was also on a downtrend. It closed at $14.51, down 67 cents. But it has gone up and down during the day, and the fluctuation is more than $1. Bank of America, BAC, the range bigger, 21.56 to 23.20, almost $2. And the stock was on an uptrend that day. It closed at $23, up 34 cents. So my point is that regardless of whether the stock is on the uptrend or the downtrend, you still see ups and downs in the daily fluctuation, here, here, and here. Now we come to how to play the daily fluctuations. First of all, you have to find some stocks which varies. over $1 during the day. Otherwise, you don't have enough elbow room to play. And because it varies about $1 each day, all you need is to catch about half of the range. You don't need to catch it all. You can never catch the bottom or the top, but all you need is to catch one half of the range. And let me give you an example. Suppose you buy 400 of Alcoa at $10 and you sell it at $10.50. You make 50 cents profit for each stock, for each share, and you're earning $200. So this is, in fact, more than what you target for. You only target for $100 daily average. And for today, if you happen to catch it, then you make $200 instead of $100. But suppose you may not catch it. So you may catch more or none. Because the stock price goes up and down, it all depends on your luck. You can never predict it. But if you catch more, then you make more. If you catch none, what do? Well, you just don't make any money for that day. You wait for the second day. There's always a tomorrow. And how you do it? You don't sit on the computer and look at it every minute. You just put in limit orders. So you put in a limit order to buy at the price you want, and you also put in a limit order to sell at the price you want. And after that, you just leave the computer, and whenever you have time, you come back and check on it. How do you determine the limit order? This is very important. You have to determine a limit buy and a limit sell. Now, this depends on your own judgment and observation. Nobody can tell you this. Of course, you should never depend on other people except your own judgment and observation. And you need to spend some time to observe the stock that you're interested in. Look at their price movements and try to see how much you understand from it. And you also have to think a little bit about the external conditions, the environment, what will be the likely effect on the price of that stock. And as I mentioned before, very important, you need a historical perspective on the price. So when you buy something, you need to ask yourself, are you buying at the top, the middle, or the bottom? How to select a good stock? Well, when you select the stock, you have to be very practical. You have to select the stock purely based on profit, not on any other things. So it has to fulfill several conditions. First of all, the stock has to fit your budget because your budget is limited. So for small investors, Google and IBM are out because they are beyond your reach. They are just too expensive, although they are good. And number two condition, you have to find a stock that varies more than $1 during the day. You have to find a stock that is cheap enough, but not on a dangerous slide. Many stocks are right now on a dangerous slide. The most well-known is General Motors, GM. It has been sliding for quite some time, so avoid it because it's very dangerous. You try to find a stock that seems to be close to the bottom. Now, this is a judgment call. Nobody can tell where the bottom is, but if you have observed and spent some time to look at it, you may think that it's close to the bottom for some good reason. And if possible, preferably, you find a stock that pays dividends. So all the three stocks that I talked about, they pay dividends.